we're exploring a pretty wild theory about a once-in-a-lifetime financial collapse. You ever feel that disconnect? The market's booming, but your cost of living just keeps climbing? Well, here's one theory why. The thing is, this theory says most analysts are looking in the wrong place. They're seeing symptoms, not the disease. It's a classic trap, right? Right before every big crash, 1929, 2000, 2008, everyone felt totally safe. So, everyone's braced for another 2008. But this theory, it claims this time is completely different. See, 2008 was deflationary. This time, the prediction is for an inflationary crash. They're total opposites. So what does that mean? It means your money just buys less and less, even if your account balance looks fine. And this is the key takeaway. The bubble isn't in stocks or housing, it's in the actual money. And how did we get here? Well, governments are borrowing trillions every year, creating a massive historic debt pile. So those things you think are safe, like government bonds or even cash, this theory says they're ground zero for risk. Okay, so what are the red flags? The argument is they're already here if you know where to look. First off, look at the S&P 500. It's so concentrated now. Just a handful of tech giants are over a third of its value. And this isn't about greed anymore. It's about fear. People are literally running away from holding cash. That's why you see this huge rush into anything scarce, anything that can't just be printed out of thin air. And that's the big paradox, right? The numbers on the screen go up, but in reality, people are getting poorer. You know, we've seen this movie before. Think Weimar Germany. Stocks looked like they were booming as the currency collapsed. So the central banks are stuck. Raise rates, the debt crushes them. Lower rates, you get hyperinflation. There's no easy way out. So how does it unfold? The theory says it happens in stages, starting with a weird, false sense of calm. And as things get worse, you can bet governments will try to clamp down, trying to control how money moves. Because when it really comes down to it, this isn't a crisis of credit. It's a crisis of trust in money itself. The bottom line is wealth doesn't just vanish. It moves. It shifts to people who own real, scarce assets. Which leaves us with a pretty big question. When everything you thought was safe isn't anymore, what do?
Boundaries.
Into a really challenging idea from our source material, the concept of a financial collapse that completely rewrites the rules of money as we know them. You know, we're all taught to think that when a financial crash hits, prices for everything fall. But our source material poses a pretty wild question. What if the next one is totally different? What if your house, your stocks, what if everything goes up in price while you are actually getting poorer? So, here's the core argument, right? On one side, you've got your typical crash. Think 2008. Asset prices tank, and holding on to cash is the smart move. But then, on the other side, you've got this thing the source calls an inflationary crash. And in that world, asset prices go through the roof, cash is basically trash, and the very thing we call money just collapses in value. It's the complete opposite of everything we've been told to expect. Okay, so for our first section, let's really dig into why our source argues that we have to unlearn everything we think we know about how a financial crisis is supposed to work. And if you look back, there's this crazy pattern. Before every single major collapse, there's a belief that just becomes common sense. In 29, it was that we'd beaten recessions. In 2000, it was that tech was just invincible. In 2008, it was that home prices could never, ever fall across the whole country. Each time, right, there was this one thing that everybody just knew was totally safe. And this quote from our source, man, it just nails the psychological trap we fall into. The very idea that this time is different, that we've somehow figured it all out, is exactly what creates this massive blind spot. It's what makes the fall so brutal. Okay, so that brings us to our next big question, where we try to uncover what our source says is today's version of that invincible belief and where all the risk is hiding in plain sight. So it really begs the question, right? If every single era has its own false god of safety, what's ours? What's that one thing today that pretty much everyone in the financial world agrees is the ultimate safe haven when everything else goes wrong? And there it is. According to the source, the huge illusion of our time is the idea that government debt and the US dollar itself are perfectly safe. The very foundation people run to in a crisis is exactly where the source claims the real danger is hiding. The argument here, and it's a big one, is that the ultimate risk-free asset has actually become a bubble. And because everyone perceives it as safe, as the source puts it, almost nobody can even see it. All right, let's really get into the weeds here because this is the core thesis. The source argues the bubble this time isn't in stocks, it's not in housing. The bubble is in money itself. I mean, to really get a sense of the scale here, just look at this number. The source points out that the US government is now borrowing over $2 trillion a year. And we're not talking about building new stuff or investing in the future. This is just to keep the lights on. That level of debt creation is just completely off the charts. And this creates what our source calls a doom loop. It's pretty straightforward, really. A crisis hits, so bam, governments print a ton of money. But all that printing makes people lose trust in the currency. And as that trust fades, the system gets shaky, which forces the authorities to print even more money to hold it all together. It's this vicious cycle that just keeps feeding on itself, and it gets faster and faster. So, where does all this lead? In our next section, we're going to explore the strange, counterintuitive fallout from all this. What it actually feels like to live through this, when the money in your pocket is the thing that's broken. So it's really important to get this straight. An inflationary crash isn't when the number in your account goes down. It's when that number just stops meaning anything. Your wealth gets wiped out not because the number gets smaller, but because the currency it's measured in can't buy you much of anything anymore. And this is where things get really, really weird. It's a total paradox. On paper, everything might actually look pretty good. The stock market's hitting all-time highs, you might get a raise at work, your house is suddenly worth a ton more. But underneath all that, your ability to actually afford things, food, gas, a vacation, is just plummeting. So all the numbers are screaming everything's great, but your actual life, your standard of living, feels like it's in freefall. Okay, so that naturally leads to the next phase, the reaction. As people start to realize, even subconsciously, that the cash they're holding is losing value, they try to get rid of it. But, where does that money even go? Well, take a look at this. The source points to this as a major clue. The insane concentration of the stock market into just a tiny handful of massive tech companies. The argument is that this isn't just because they're good businesses. It's money desperately trying to escape the dollar and find a home in something, anything, that feels scarce and dominant. So the key idea here is that this isn't your classic bull market, driven by optimism and greed. Instead, it's a defensive stampede. It's driven by the absolute terror of holding something that's melting like an ice cube in your hand. So where do people run? They run to what the source calls the new lifeboats. And these are all hard assets. Basically anything that a central bank can't just print out of thin air. We're talking gold, Bitcoin, farmland, even rare art. They become the new stores of value when the old one, the currency, starts to fail. All right, so this all builds up to one final massive question. What does the world actually look like on the other side of this great unraveling? What comes next? And the contrast is, well, it's pretty stark. The old order, built on debt and promises, starts to give way to a new one that's built on scarcity and real stuff. Think about it. The old system runs on fiat currency, money that's only valuable because a government says it is. In the new order, trade is backed by tangible things like gold or energy, and power shifts away from countries that control finance and towards countries that control actual resources. And that brings us to maybe the single most important quote from the source, the one that sums this whole thing up. Value is like energy. It doesn't get destroyed, it just changes form. When people lose faith in money, value doesn't just evaporate, it flees, migrating from those failing paper promises to things that are real and scarce. And the source makes it really clear this isn't some sci-fi prediction for the future. It's presented as something that's already happening, right now, in slow motion. And it leaves us with this huge question we all have to grapple with. In a system built entirely on promises, what actually has real value?